Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of those interesting financial market themes that I'm observing. Now, equity markets have been very strong, especially in the US during 2021. But I want to talk a little bit about momentum and the weakening that we've seen throughout US equities across several different sectors. Number two, we talked previously, September is the worst performing month of the year from a calendar perspective. Let's look at within that month. Most of those losses actually happened during the latter part of the month. And then finally, NFIB Small Business Optimism report from August was released recently. Let's dig into the expectations of small business owners throughout the country and take a look at why they believe sales over the next 6 months might be a little bit lower than previous months. So as I mentioned, with a lot of the US indices at or near all-time highs, especially in the large cap part of the market, if you look underneath the surface, especially in the small and some parts of the mid-cap space, we've continued to see a little bit of weakness. And if you look across this chart here, which looks at various sectors within the US equity market, the percentage of stocks within each sector that are above their 50-day moving average, this simply tells us what percentage of stocks for each respective sector are in uptrends, okay? And what we see here is the majority are about 50% or below. And what that basically tells us is the majority of stocks in the US equity market are in short to intermediate term downtrends right now, with most of the price indexes holding up. Now, that's a concern of ours. That's what we would refer to as a little bit of weakening market breadth. If you look at the overall top line number for the complete index of the S&P 500, that figure stands at 48%. So yeah, just below that middle ground, so just less than half in an uptrend. That's been going on for about 3 or 4 months. And most of the story behind that underperformance has been in the small cap space, which has had very weak price action and very weak breadth relative to many of the large cap equities. Now, if we take a look at seasonality, September historically is one of the weaker months of the year. On an average basis, it is the weakest. What's interesting is most of those losses actually occur from the 19th through the 30th. So during the last third of the month, which of course is the next period we're coming up on. So I wouldn't take this as clockwork. It's not 100% guarantee. It's something to pay attention to that typically happens when we have these low volume periods like we've been experiencing in 2021. Now, the NFIB Small Business Optimism report came out here in August recently. And take a look at the expected higher real sales in 6 months. So this is the expectations for sales numbers from small business owners over the next 6 months in negative territory. What's interesting is not just the absolute figure itself. We're obviously above those lows you see back in 2020 in the heart of the pandemic. So there's more optimism than there was then for obvious reasons. But it has been declining during the past 6 months. And this is something we've started to see a little bit on the public company side too. You're starting to see in earnings conference calls, not only shortages, but I think the response in consumer behavior, some offices delaying the going back to work for a longer period of time than maybe perhaps some people expected with the recent rise in Delta variant cases. You're starting to see a little bit of sentiment, not only from consumers, but small businesses decline a little bit. Now, small business owners are actually the single most important concern of theirs has been inflation. One good note on that, in the month of August, we received the most recent inflation reports, and it was a little bit lower than July. So there are some signs that some of the inflation that has been persisting for the past 3 to 6 months is starting to slow, especially in the more volatile areas. Think those rental car agencies where the prices were just skyrocketing, along with some of those reopening sectors like lodging. Before we wrap up, I want to share a pretty interesting story out of the country of Dubai. Now, Dubai is obviously a very hot place, a desert country. This year, they reached record highs of 125%. So you can imagine during the summer months, everyone wants to be inside. There's not a lot of agriculture. They're trying to find ways to combat this, and they're using a pretty unique technology where they're actually flying drones into the air and zapping small clouds with electricity, which apparently creates rain. Now, that sounds like a story out of a sci-fi movie. It did to me too. This is actually a technology, or in some form, a form of a technology called cloud seeding that's been around for several decades. But the traditional cloud seeding is done with chemicals. And it's actually, there's about 7 or 8 US states out in the western part of the country that do it currently. Some concerns with environmental issues related to the chemicals. This one shifting away to electricity. Again, jury's still out on this because it's relatively new, but nevertheless, a very interesting development in the desert of Dubai and perhaps creating rain from drones and electricity. That's a pretty new story. So with that, I want to thank everyone for watching, and I'll see you next time.